All right, guys. So today is February 8th. It's simply show you some risk in the market. So what you're looking at is a chart of the S&P 500. This gray bar is the prior fractal from the previous cycle beginning in the 1980s and running through the great financial crisis in 2008. Okay. So I overlaid that over today's market cycle, beginning with the bottom in the 2008 financial crisis, which the bottom occurred basically in 2009. I want you to see something. Look at the similarity, how closely we are following the exact market cycle from the prior period. Are there periods where we deviated? Yes. During that deviation, where do we come back to? The same basically trend as the prior cycle, right? So here's what I want you to see. Prior cycle, wave one, wave two, wave three, wave four, wave five. We are nearing the end of wave five in a multiple decade monthly chart view of the S&P 500. That means we have major correction ahead. Okay. So when I overlay that fractal pattern from the prior cycle, you'll see we are nearing the top of this wave five pattern. Okay. I can't be certain that I've overlaid this exactly as it will play out. I can't be certain it will follow it to the T. We could go nowhere from here. We could break downward tomorrow. I don't know. But when I lay the exact market cycle from the prior period, which we have followed very closely, it's projecting that basically we're going to hit a top probably by the end of this year, and we're going to start rolling over by May or June of 2027. Okay. What do we have from that rollover? According to the chart, we're going to see a 45% decline, not from where we are today, but from where we reach the market top. Okay. So let's say the S&P 500 continues to climb between now and the end of the year. We hit 8,500 as a market top. I'm talking about a 45% decline from 8,500, not from today's 6,900. Okay. So we could see major upside potential for another couple months. We may not, don't know. I'm just telling you what the fractal from prior cycles that we're following very closely, what they're projecting. If you look at this, if it plays out like it did last time, 2008 was right here. This is where things broke last time. Okay. This is basically the mid 2030s. I'm expecting a lot of things to go wrong mid 2030s. All right. So I'm telling you here, from this top in 2027 or 26, whichever you want to look at it, till almost 2040, you're going sideways to down. That means if you do nothing to your retirement account, once this thing tops, it will take you till 2040 to break even again. Okay. I'm not leaving. Inflation is going to eat the hell out of your retirement account during this time. This is what I was projecting with capital rotation occurring in video one. And as you can see, this is probably going to help that capital rotation chart come to fruition. So this is just S&P 500. This is eerie how precise we have followed this pattern from prior periods. All right. Look at me. Dow Jones, same thing. We have eerily followed the prior cycle. When I overlay it over the current cycle, we're virtually following the same thing over and over. You think history doesn't repeat? If this doesn't prove to you that it at least rhymes, you're blind. But what is this projecting? Same thing. Probably a market top sometime next year. This one, the time frames are a little bit different, but it may just be the way I have it stretched to lay out on here. The S&P 500 is the one I'm giving more credibility to. Oil seems to coincide with it. The chart that I have laid out for oil with the fractal that I've shown you in prior videos, but same thing here. I took the prior period move from the prior cycle and I overlaid it over today. And this is what it's projecting. My video one, based off of the expensive and cheap end of the channels I've shown you before, my projection was by 2032, $513 barrel oil. That's an 8x increase. This is projecting basically the same thing, $500 oil by 2033. Okay, not precise. I don't know if we'll hit it. I don't know if it'll be that exact. But multiple methods that I'm using are coming up to the same figures. All right. What does this show? This shows that we are, like I see in the charts, looks like we're trying to break out in this downward facing wedge. Okay. So if we follow the prior cycle, oil is projecting the same thing as the S&P 500 chart. Sometime around April, May, June next year, major downturn. Okay. This is a 50% correction in oil from its peak that I expect we will hit next year. What does this mean? It means if I'm buying my positions down here, I'll probably go up 50% and back down 50%. 2028, continuing to move forward higher. Okay, so why am I buying my positions now and not just waiting till 2028? Well, number one, I'm probably going to more than double, maybe even triple some of my oil plays during this period. I can make a decision here. Do I want to sell my positions, take my original investment off the table and play with other people's money for what I leave in the position? Or maybe it does not correct downwards. Maybe it corrects sideways. I'm going to leave that up in the air. I'll make the decision when it gets here. Same thing. I overlaid the fractal from the prior period. And my suspicion is we probably have hit the top in gold for an extended period. We're probably going down to sideways consolidation, probably until the end of 2027 or so, beginning of 2028. We could see gold pull back as far as $3,700. Worst case scenario, maybe even $3,000. So, be prepared. There's going to be another entry coming ahead, but maybe it doesn't pull back. Maybe it goes sideways. If it goes sideways, you'll still be in a better position to buy in the future. I told you in prior videos, I probably would not enter gold or silver positions, the miners on those metals, just because of the way they moved so far so fast. I knew this pullback was coming, and I think I'm going to be proven right on it. But long term, even if I bought today and experienced this pullback, if I'm sitting in my position for 7 years, I'm still, according to this chart, going to see $11,000 gold. Silver, same thing. If I look at the fractal that I overlaid to the best of my ability, we are probably going to have a pullback to somewhere between $60 and probably $50. Worst case scenario, it could pull all the way back to 30. Do I think it will? Probably not. Does this project that it could? Yes, it does. Either way, buying at the top of the recent move, not a good idea. This chart predicts the same thing. It's probably going down to sideways through 2028 before continuing drastic up move. So it'll say I did buy the top and I rode this thing out. Am I still going to make a lot of money if I hold my position long term? Yes. 2029, 30, 32, somewhere in there, I could be looking at it at potentially over $1,000 silver.